This is Jets. It's the only airline ETF on the market. Pretty much it does what it says. It's about 70% carriers, 30% companies in the industry that support the airline industry. 100 million, so decent size for a theme ETF. 60 bips, about in the ball game. Look at that chart though. This is why we're talking about it today. It's just been destroyed because of the coronavirus. Let's look at the holdings. These are going to be stocks that everybody knows. Sometimes, some weeks we go over stocks that are less known, but these are obvious airline stocks. Let's look at this fund versus the nearest thing I could think of, which is the Dynamic Leisure and Entertainment ETF, which is PowerShare's Invesco product, which tracks airlines, but also like Disney and other entertainment companies. Look at the 88% airlines here, only 29% here, but that's the next closest one. Bad performance here, but they had a decent last year. Anyway, that's the takeaway here. Scarlet, this thing's got a PE of 6.5, right? So this is either going to scare people away or attract some bottom feeders.
Absolutely. All right, Eric, thank you so much. Still with us is Frank Holmes, CEO and CIO of U.S. Global Investors in San Antonio. Frank, when it comes to the airline industry, you have canceled flights, you have reduced schedules, higher expenses from cleaning the aircraft. But there are some positives as well. Lower oil prices, for instance, cheap oil prices. And Warren Buffett, he's clearly not going anywhere. And if history is any guide, maybe, perhaps he plays an even bigger role. I think back to the timely investments in Goldman Sachs and Bank of America during the financial crisis. What are you focused on?
Well, I think there's just great thoughts you have. And there's no doubt Warren Buffett coming in, buying Delta. And then there was a JP Morgan conference call that was articulating that a 17% drop in fuel prices would offset a 4% drop in revenue. And then now we have a 30% drop in oil prices is going to offset a 10% drop in revenue. So I think what's important is that these airlines have had incredible growth in ancillary revenues, and they still trade at 6 times earnings, which is 1/3 of the S&P 500 and 1/3 of the transport index. They have a moat around their business, and that's why people like Buffett are buying, and we've seen the assets double since they've fallen.
Right. Now, before this virus hit, the airline industry, you could argue, was in the best financial shape of its life. All the nickel and diming on passengers, on checked baggages, seat assignments, and fees on schedule changes were really paying off big time. So my question to you is, how much of a cushion do these individual carriers have as a result of those good times?
Well, I think they're very lean and using AI and all the advanced technology to maximize their revenue. Besides these fees that bother you, because I fly quite a bit and I understand that pain and suffering of it. But I think what's important is that American Airlines are 21% or 23% of the global capacity, but we're 65% of profitability. So there's lots of cushion here in America. There's not that cushion in other places in the world. And this particular ETF is an intelligent ETF that basically kicked out Boeing because their cash flow returns on invested capital fell and brought in Airbus. So it's a dynamic process each quarter that's rotating out and looking at those companies that have the highest returns on invested capital.
Frank, it's Eric here. Look, I looked at the PE ratio of 6.5. The only 2 ETFs that have a lower PE are Nigeria and the coal ETF. So that is very low. Where do you see it in a year? Let's just assume there's sort of a break from the coronavirus fears. Where do you think that should be?
Well, I think once the coronavirus is over, then they could easily pop back to $30, where it seems to have had a range between 27 and 33. And I think what's really fascinating to me, Eric, is just the number of creates we've had in the past week. It's just unprecedented. This fund, each time it's fallen lower, more and more money has come into that fund as a value proposition, as a deep contrarian investors are looking for the bounce.